Shweta. You've been with Anand Rathi Wealth for the last 12 years or so and have earlier worked with Religare Securities too. A very warm welcome to you. First off, imagine a person who's entered silver ETFs above 350 rupees per unit and gold ETFs at 160, 170 rupees per unit. What would your advice be to such a investor who's really now bothered?
Perfect. Good afternoon. So first up, it's important as to why you have that gold or silver in your portfolio. If you had it as a risk mitigant, then that's not the right asset class for you, because gold and silver will have the same volatility as equity would be. But equity would have the return potential, which would be little more than probably gold and silver can give you over a 5-7 year time period. So my, looking at how the volatility has been recently, I would say your majority of the portfolio still should be equity heavy. Gold is better than silver from a volatility perspective as well as a slightly long-term perspective. So if you can consolidate, have gold, no problem to a little extent in the portfolio, have debt, have equity.
Let me just rephrase this question a little better, Shweta. Maybe I wasn't able to put my view forth. I'm asking what should an investor do if his or her gold and silver ETFs are bleeding losses at this point of time? Average lower, hope for the best. Will these prices come back?
So would the prices come back? Yes, they would come back. The only question is going to be when would it come back and what would be your opportunity loss or gain if you continue to be with that asset class. So which is where, if I have to look at it in terms of, silver is more driven by industrial demand. And right now there has been some amount of an industrial demand over the last few years, which is where we saw an upside in the silver prices. Of course, can there be other metals which can also take over silver? That can come in. So yeah, hold on for the next few months, but that's not an asset class which I would ideally build from a long-term perspective. So if you can shift from silver to gold, that would be a better choice. Not now. Hold on. Right now it's going through an excessive downside volatility. Let it stabilize a little. And then shifting out to gold or equity to recover if there is any residual loss may be a better choice.
Okay. From what I understand, for those wanting to get a precious metal exposure, go for gold ETFs at this point via a SIP format, Shweta?
Yes, but it is important to understand that gold should not be something that is, an option or an alternative to the equity portion of your portfolio. If you are replacing debt with gold, then you can have it. You can build it in the SIP form if you have money which is coming in on a regular basis. So like if you have your salary and then that portion of it has to go in gold, then do an SIP. Else, I would say stagger your investments maybe for the next 4 to 6 weeks if you have some lump sum sitting in your bank account, and go full up with your allocation.
If you like the video, do like, comment, share and subscribe.